What's going on, guys? It's GBP baby. Welcome to another video. I hope everybody's doing well, and I do want to start this video off asking if anybody wants or is willing to be in an interview with me about trading, about the charts, all sorts of different topics. I'm looking for someone to interview online, or if you're in the UK, potentially in person, as I do want to start a new series here on the channel. So if you'd be interested in getting interviewed or discussing some data with me or anything like that, please drop a comment below or join the Discord and send me a message, as I am looking for people to get involved. Anyway, let's get straight into things. We're going to start looking at the US dollar index 35-year seasonal, and the reason I'm looking at this is because we do start March tomorrow on Friday, so we need to look at March, as in the trading month of March, and see how it performs. And you can see that generally for dollar, March is quite a bullish month up until about the midpoint of the month, where we have a reversal. So we can anticipate some kind of reversal, a heavy reversal in March, but generally speaking, you can see that all the Marches, both on the 35-year, 15-year and 5-year, the seasonal tendency has shown March to rally into the middle of the month. So we can now go in with that kind of preface moving into the month of March. Furthermore, I've also delineated the IPTA data ranges here, 20, 30, 20, 40 and 60 days forward from the 1st of Feb, and 20, 40 and 60 days backwards from the 1st of Feb. So you can see we're just entering that, after that 20-day period, entering the start of the 20-day period. So we've casted forward 60 days. This is 40 days here. This is 20 days. So now we're starting from that 20-day period. So we can expect either a continuation or, a reversal. I'm expecting a continuation. We've been bullish. You know, I've been bullish for a pretty long time, way back from January. So if you've been following me, you'll know that that's been the bias in general. But at least we can head into the month with this bullish bias and expectation. And you'll see I've also graded the last 20-day period. So from the 1st of Feb, I've graded it. So we have the high, which price may want to draw towards, and we've got the low, which I doubt price wants to draw towards right now. And I've also delineated the midpoint and the 25% level. And the reason for that is just to see how price draws to each level. So we're going to start on the daily, of course, and you'll see here we have a nice volume imbalance that I do believe price is still working its way up to. So I'm just going to drag that out as a target for price moving into the new month. Another thing I want to draw our attention to is this bullish order block. You can see we traded through it yesterday on Wednesday, but we also traded through it, and looks like we're closing above it. Well, we are likely going to close above it today as well on Thursday. So we can draw this out with a black line, and we can type bullish order block, because this is a significant level where if price returns to it, we can anticipate a strong reaction. So let's drop down to the 4-hour and get a closer look at price action. You'll see price today traded down twice into the level which I was bringing our attention to in yesterday's video, and then you can see we finally expanded and starting to get that expansion that I was talking about and anticipating for the entire week. So that's nice to see. Here, this is that bullish order block level on the daily, which I was just speaking about. So now I've drawn that out, and yeah, you can see we're finally starting to work our way up. So what I'm looking for now is all going to be premium arrays, such as this buy side liquidity here. So I'm going to get that delineated, and I'd like to think that price will draw towards that on the Friday with the high impact news. And we also have this fair value gap that I would like to see price start to fill. But let's go down to the 1 hour just to get a better look at price, and you'll see our price came down. This was that level I was talking about in yesterday's video. I delineated an orange level right here, and I was saying watch this level for price, and you'll see price came down during London, traded aggressively off of it, but then it came back down one more time to grab stops below it, wicking further down, and then expanded higher. So don't get me wrong, this price action, it is very tricky. This did throw me off. I didn't expect us to touch this level twice, once, then twice like this. So generally speaking, it wasn't the smoothest or cleanest delivery, and I can imagine a lot of people got taken out on the way up, but still, this level remained significant, and you can see how price treated that and used it to springboard higher and finally running towards these highs. So what am I expecting moving into the new day? Well, now we have a breaker. We've got a low, a high, a lower low, and price has broken to the upside. So that order block level lines up nicely with that breaker high. So it'd be nice to see if price can come and tap that. This should provide a lot of sensitivity to, again, send price higher, running for that buy side liquidity and into Wednesday's high as well, which we didn't quite reach today. If we go down to the 15-minute, you'll see our price is just kind of consolidating right now. So again, maybe during London or even the Asian session, price may want to come down, tap this high before trading higher and running for these highs. One thing to take note of, price doesn't have to come back and refer back to this just now. So although I do want to see price come back down because it's a breaker, last up close candle before the down move, although it would be nice to see it may not. As in, price may be so bullish that it just continues higher, and that is completely fine. We should still be able to find setups. Judging on how bullish we are as well, I wouldn't be surprised if we rallied during London and then got our retracement from New York. But I don't really want to speak too much on that. Another thing to take note of is we do have a reclaimed bullish order block that we are trading at. So here, this is a bullish order block because we caused this big up move to take out this swing high. And what happens when we put a level on this bullish order block right here? You'll see our price is respecting that here. And the reason I'm bringing our attention to that very specific order block right here, the reason I'm doing that is because, again, I just said price doesn't need to come back down to this breaker. As much as I want to see it do that, it doesn't need to do it. And the fact that we've traded down into this reclaimed bullish order block right here is one of the reasons why I'm saying price doesn't need to come down, as in this may provide enough support to send price higher. So that's something to consider. But overall, our drawn liquidity is certainly going to be Wednesday's high, as we failed to reach it today, and these relative equal highs that we have up here with a nice fair value gap, which is also lined up with that 25% level of the previous 20-day range that I brought our attention to. So hopefully you're following along. This is a lot. This is a lot in general. But this is everything I'm looking at, guys. So definitely get all these levels marked out on your charts and just watch how price works its way up tomorrow into that level. But definitely consider this as a potential low where we could start looking for entries in the new day. We'll go to the 5-minute, just have a better look at price. Again, came down to that level, traded higher. I did think we were going to rally up into Wednesday's high from here, but then we kind of turned around, grabbed stops one more time before reaching 10 o'clock, where during London close, you can see price just rallied aggressively, again, taking out these highs, and now we're just consolidating. So yeah, hopefully moving into the new day, trade higher. Again, it doesn't need to come back down here. Why? Because we've already grabbed stops from the south side. Like, price doesn't need to always retrace after an expansion like that. It can continue. So do not be surprised if we do see continued expansion up here, up into the buy side liquidity. Let's go on to GBP USD. We'll start on the daily as well, and you'll see I've done the same thing with as what I've done on dollar. So here's what I've done on pound, and you can see that we're finally starting to see some proper expansion and breaking market structure on the downside, just as anticipated. So here is the previous 20 days, and we're just about to enter into that new set of 20 days right here. And that means that we can start looking for PDRAs in the sell side that we want to see price trade to. Now, obviously, we have the low, which is down here, and this low right here as well. So that is our general draw. But we also have all of these lows here, here, and here for price to want to draw into. But let's drop down to the 4-hour. We should be able to get a better look at price. And you can see price is finally starting to step its way down, and we just have lows after lows after lows after lows after lows. So there's going to be a lot of sell stops residing below these lows for price to want to draw into. Another thing to take note of is, again, today price action, we took out buy stops, took out some buy side liquidity above these relative equal highs right here. So buy stops have been grabbed, and then we traded to the downside, closing below this swing low. So that means moving into the new day, we should be anticipating more shorting opportunities for us to start running into all of these lows. Let's drop down to the 1 hour just to get a better look, and you'll see I have the daily dividers drawn out. 1 second, let's go to the 4 hour. So here I have the daily dividers for the week. You can see Monday's made the high, consolidated Tuesday. Wednesday we moved lower but kind of pulled back into ourselves before we had a nice proper move on the Thursday, running out buy stops and aggressively trading lower. So similar to dollar but inverted. I want to see continuation to the downside on Friday. Let's just get Friday marked out properly like so. We do have a breaker that's formed, high, low, high, high. So we should be watching this level now. Can price come up and touch that? The same way we was expecting dollars to come down into its breaker, we can watch this level and expect shorting at that price right there. Once we expect shorts, where do we want to run to? Well, we have relative equal lows now below here. There's going to be sell stops below there, so we can use that as a target. And then we also have these lows as well. So there's, generally speaking, there's a lot of targets. One thing that is definitely getting my attention is this hourly fair value gap all the way down here. Now, I don't know how bearish pound is going to be tomorrow, but this is an hourly fair value gap and imbalance that price may want to draw itself to. So we have relative equal lows and a clear imbalance in price right here that price may want to make its way to on the Friday. Let's go to the 15-minute and have a better look at price. Again, consolidated, moved down during London. Moved down into New York, rallied ran out buy stops before aggressively turning around and trading lower. Last down close candle is the breaker, high, low, higher, high. So now we're watching that level to look for shorts. And again, look, there's a bearish order block here. And I've said this multiple times on this channel, price will always return or tends to return to original consolidation. This is the original, like you can see us consolidating. This is the original consolidation. So it would not surprise me if price wants to return back to this level to go short. But again, just similar to what I was saying in dollar, it doesn't need to. And I'm saying that just because I've seen price action where price fails to return to the breaker and simply just falls straight out of the bed. And when I say straight out of the bed, I mean straight out of Asia into the new day, running lower and creating the low maybe in London. So that is something to consider, and that very may well. If that happens, so let's say we don't trade any higher and we just run straight for this imbalance, then we can anticipate a reversal and price to then trade higher towards that level. So that's our alternative to what price is going to do. But overall, I want to see lower prices, again, in line with dollar moving higher. So hopefully that makes sense. Finally, let's finish on Euro USD. And it's going to be pretty much the same thing. I'm going to start on the higher time frame for us. We'll start on the daily. I've done the same thing again. Ignore these lines. In fact, let's just get this sorted. So here is Euro, and you can see finally we've closed now below bullish PDRA. So this is a bullish order block, but finally on Thursday we traded through that bullish order block and closed below it, meaning that we should now be acting bearishly. Furthermore, this bullish order block should now act as a bearish order block. So we can actually drag that out and we can see how price treats that moving into the new day. Let's go to the 4 hour. And again, you'll see a nice fair value gap has formed and a breaker, high, low, higher, high. So I am watching this level, but again, this is where we'll probably find some kind of divergence. For example, GBP may have the strength to trade to its breaker, but Euro may not. But you can see we've got some beautiful relative equal lows below Euro here, here, and here. So these are going to be sell side targets for Euro in the new day. And we have a nice fair value gap up here with a bullish order block. So again, lower prices on Euro will be preferred. Here's the breaker on Euro, high, low, higher, high. But as I was saying, price may not even want to be able to reach up there. It may simply fall straight out of bed, trading lower and running into that fair value gap. So do not be surprised if that is the case. We'll drop down to the 15 minute and you'll see our price has been trading, kind of consolidated. We may get a slight wick up. This is very common, especially in the Asian range. We may, for example, wick above this swing high. Small fair value gap right here. There's a fair value gap right here. So price may want to wick up into that where we can anticipate shorting for us to then run for the sell stops below here. So that would be ideal, but it doesn't have to do it. And you'll see what I mean as we move into tomorrow. So yeah. So that's going to be everything, guys. I hope you found this insightful. I hope that will make sense. If you have any questions, just join the Discord and drop a message. I'm right there. And I'll catch you on Sunday. Also, again, just to rephrase what I started the video with, if anyone is down to do an interview, I'm happy to work with you guys. There's some more content I want to create for this channel. So please drop a comment or hit me up on Discord. Catch you in the next one. Peace.